Harsh joins us to tell us more. Harsh, over to you.
Right, on the 24th of February, you had the SEBI come out with a change in norms with regard to open interest calculation. The erstwhile norms was more based on volumes, and therefore ensured that there were larger volumes which exchanges were getting as a result of this, and those were used for the purpose of calculation of open interest, not anymore. And therefore you might see an impact with regard to volumes for both exchanges. Now, to try and quantify this, Jefferies is suggesting 5 to 10% impact overall. You will see derivative volumes currently at 45% for BSE, 70% for NSE drop, and therefore for BSE you will have 5 to 10% lower volumes, and that could impact EPS by 2 to 5% as per Jefferies. Goldman Sachs, though, they've cut their target price on BSE, 4880 now being the revised target price. They maintain their neutral stance. The lowering of industry options, they say, will likely also lower penetration. The SEBI consultation paper is to reduce undue volatility in equity markets, is what they're saying. Move doesn't bode well for exchanges. BSE shares largely pricing in the risk already to industry volume degrowth, and they're saying that the pricing in risk from implementation of the proposed rules could also impact exchanges. The final outcome remains highly uncertain, they say, and this paper was not expected by the market. That's why you've seen the knock on BSE, but they still continue to remain constructive and positive on BSE. Goldman Sachs target price 4880.
4880, that's the target price coming in on by Goldman Sachs. Avinash, let me come to you. How are you looking at this in terms of impact, and what would you advise investors to do with a BSE?
No, I think, Hiral, we have been constructive on the Bombay Exchange Limited stock. We believe that, this could be a short-term deterrent. But longer term, I think the kind of trajectory which BSE has and the runway of growth which the company enjoys, I think definitely points out that, over the next, say, 12 to 18 months, these kind of events are unlikely to have any major earnings damage. So, I think the markets are overly pessimistic, and I think clearly, in the short term, it's going to be the news flow which is going to impact the stock. But I think going forward, looking at the kind of positioning BSE has got, more importantly on the derivative side, and expecting that probably in the very near term NSE could get listed, we believe that BSE has got several growth triggers, and I think with the capital market offerings obviously getting impacted because of the poor market sentiment, that is also one reason why the exchange stocks are under pressure. But I think clearly, looking at the next 12 to 18 months, if any correction further happens, we could definitely be further constructive on the stock. We would definitely believe that growth triggers continue to be strong. But yes, in the short term, the markets would obviously, keep the stock under a little bit of pressure.
Long-term positive, 89% is the kind of upside that a BSE has seen in the last 1 year as well. Amit, what are charts indicating?
Same view will be just from my end also. If you look at the overall setup, more selling can be witnessed while going ahead, but it is a short-term selling as per the chart setup. But the support for the stock is at 3900, where we are seeing that 200 DMA support is also coming at that level. So currently, while going ahead, more 3 to 4 days selling can be seen in this counter. But once counter comes near 3900 to 3950 level, after that we will witness some buying pullback in this counter.